Yo, welcome back. Hey, what's up? Hello. We out here. I said before that we are not trading today, and that is exactly what we're going to do. We're not going to trade because I'm looking at a flashbang. Also looking at this FOMC here. Meeting minutes. Don't know what it means, aside from it applies at 2 p.m. I want to trade because it's 2 p.m. That goes into effect. More hawkish than expected. This is good for currency. Which means price is scheduled to go much further down, around 2. I'm going to say I'm disappointed in myself for not being able to read the market as well as I wanted to. The idea was right from the get-go. From the very first idea we had, that was absolutely correct. We entered on this, on a sell position, on a short, thinking it was going to go down, and it did. We were too impatient. I was too impatient. I decided that it'd be best to exit the market because we would have been stopped out. And that's exactly what would have happened had we stayed in. We would have been stopped out right here. I said price was going to go up to this level, wick it, and continue down. That was per my best judgment. That was my best mode. That was after putting building blocks and reassuring myself, yes, this is going to go up. I made a mistake. I made 2 mistakes. And I'm pretty sure I said it before. My first mistake was thinking that it was going to continue up and then reversing the position when we didn't have to. We knew the idea was right. We knew it was going to come back down. We waited for every building block to get hit. And we knew it was going to go back down. We entered at the best level. We entered right here. This is where we entered. That was prime time. We caught the move. But I was stupid enough to reverse it. And because of it, we're $8,000 negative. I don't like looking at that. I really don't. If I wanted to trade today, what exactly would I be doing? Right now, I'd be leaving this note that I left for myself right here. So that way I'm not getting confused. There is no questioning about it. There's just what I did in the market and why we left it the way we left it. I lost $4,000 on this trade, thinking my idea was right, and being impatient while the market had its way with what I put in. My lesson: trade with recent trend, not past day's trend. So take profit and stop loss before entering within trend unless I have a backup plan for when I'm wrong. If I am wrong, all positions, remove all positions and do not either enter or reverse again. Sound advice. That note was taken directly after stopping recording and witnessing that trade just fail. That was a rough trade. It really was. We left as the candle was forming. I'm sure y'all see that. We entered here. We were up here when we lost. All it took was a little bit of patience, and we would have seen a return. We would have seen a lot of return. This was what? 15. 3 p.m. Tuesday. And went as low as this right here. This is 1:30 a.m. That's this morning. I was asleep. And we've been in a constant down ever since. Patience goes a long ways, and I need to learn how to be as disciplined as I can be in this market. Are we taking a trade today? Per the rules of TJR, no. We can't. Why can't we? Because of that right there. That's the only reason we can't. However, I'm tempted to do so, even though this says 2 p.m. And hawkish is good for currency. That means if we see a large spike up or down, or similar to what we saw here, right? It's good for currency. I don't want to trade today, but the riskiest moves reward the most profit. Do I want to risk it today? Would it be considered revenge trading? Realistically speaking, I have no idea. Not a clue. I immediately after watching the videos on YouTube, not my videos, but someone else's videos, I went to Reddit. I went to pretty much everywhere, trying to learn, trying to master charts and trying to trade them, trying to get good at it. I saw somewhere that said people can read lines on a chart and make up anything. I also read somewhere that it can be fruitful, depending on how good you are at reading charts. Now, I understand the perspective of someone who has lost a lot of money and is salty about losing it. I understand the toxicity in someone saying, hey, don't do it because I'm better and you're not. I'd also like to think and say that my judgment of character is not good, but it's also not bad. For instance, TJR. I think his character is okay. I think if he wanted to steer us wrong, he would have been a whole lot richer a whole lot sooner. And he's shown and demonstrated he's gone through time in, time out, all this other stuff that people say, oh, don't do this. Oh, don't do that. Careful with this. You might want to be careful here. That's the thought. That's my thought at the moment. Those key levels are accurate enough for me. We have the highest point and lowest point in Asian session, highest and lowest in London session. They're good, in my opinion. Our most recent high is up here. That's outside of session highs and lows. And the next low is right there. Outside of session, down, up, low. Right there. What I want to do is fairly simple. I want to wait patiently for what market has to do. Because I was looking at what TJR was saying on his most recent video. That this right here is the most that has been dropped from the S&P since way over here, since COVID. I believe he showed this example here. This was COVID. And as a result, people were getting rich off of this move, and then boom, market took a hike. We kind of want to do the same thing here because we have a similar gist where market has moved down, the most it's moved in a while. We had a mini retrace, but here we are moving down again. How much longer it'll move down, we don't know, but COVID, we had a couple months of scare. This is not COVID. This is a political move. Tariffs with a huge draw on them. Huge draw for companies who want to buy goods to sell to their customers. And as a result, they're going to try and level out their pricing, their spending to selling, right? I think he pieces it together pretty well, and he goes into detail, and he is not a financial advisor, nor am I. I have less experience in the market than he does. But I can't say we're both retards. I can say that, just because. With that being the case, what can I do right now? Because I'd like to get rich off this move, but I only have $100. He said not to invest. Okay. So I'm going to stick to my plan originally, which I think is smart. I think it's smart. I need to get good at determining where market's going to go first. So good, I'm not second guessing myself mid-trade. So good, when I see a retrace, I'm not tempted to reverse the position. So good that at the end of the day, we come out with more than what we had in the past. That is what I'm currently after. The proficiency needed to stay profitable. And I know I'm going to lose sometimes. I'm open to it. I'm just not open to losing all of my account in one trade. That cannot happen. So, today, we're not taking a trade. We're looking at the chart. Period. No, I'm not going back on it. No, I'm not trying anything. I'm legit just watching the chart. Period. You can see all the trades we've taken the past couple of weeks. This is representative of a day. We currently are in a downtrend still. Again, this is the most we've dropped in a while. Been a mini retrace, and here we are dropping again. Huge moves per news on the day. Hawkish means good for currency, which means candles like this right here, these two in particular. Our price is all over the place, but we're closing relatively close to the open. I got 6 a.m. stretches. Ugh. Well, we're closing relatively close to the open on these two candles here. When I hear the word hawkish, I'm usually it usually means price is all over the place. I'm more than likely going to say price is going to continue down today. This is my daily bias. Price is going to go down today. How far down? No idea. How do we want to catch it down? We want to see the reversal on the upside. That's first one. Because right now, per this right here, we're in an uptrend. Actually, per this right here, we're in an uptrend. This is 5 minutes. So that was daily that we just did that. Yeah, this is daily. This is daily, but this says we're in a downtrend. I don't know why I'm saying anything else other than that. Boom. You're still in a downtrend? Yep, still in a downtrend. Boom. We haven't made a new low though. How have we not made a new low? We haven't made a new low. It hasn't closed below. Well, this is the draw on liquidity, right? We saw that draw get hit, but it wasn't crossed. It was just respected. So, do I think the move has ended? This would be indicative of it. However, there is a problem. We're not seeing a liquidity sweep up here. Actually, we did for this right here. I said price is going to continue moving down, and sure enough, that's what it's doing, is moving down. We have a low here, and low here. This was the end of the drop, the big bad scary drop. At least this drop, not this one. General direction, down. Look for sweeps on the high. Catch a sell. Watch it drop. That's honestly what I'm looking at. Do I want to trade on news? No. No, I don't. I don't want to trade on news at all. I don't want to lose the money. I don't. We were having so much fun earlier. This looks so much worse than it did over there. Same story though. Huge drop, mini retrace, drop again. Boom. That works. We had a liquidity sweep. We had a low here. We have not hit that low again. I think that's the same thing on this one. Yeah, we haven't hit the low on that either. So both are in the same retrospect. We're in a downtrend. We haven't made a new low. We need to make a new low. Today, tomorrow, don't know when, but we need to make a new low. Let's go to the hour. And this is where we were identifying two SMT divergences from here to here. These were right. Everything was saying down on the S&P. NASDAQ was saying up. The S&P called it. We went further down. Much further down. Not as far down as the NASDAQ, still. Down nonetheless. Okay. Why am I setting these up if I'm not taking a trade? We're looking. We're studying. We're learning. Nothing more, nothing less. Seems we may have had a bit of S&T divergence on that note. Cool. Then our most recent high. I'm going to go to the 5-minute on the other one and do the same thing because I need to do this. There's the most recent high outside of this one. We're going to keep this fairly easy to read because I don't want to get confused. There's green there. Up, down, high. Boom. And this could be a draw on liquidity here. We have a high here. Boom. We have a high there. Boom. High there. I'm most comfortable with that there. We have all these highs we could take profit off of if price chose to move higher. And it looks like it might just because we have, again, the break of structure here. On this candle, we broke structure from this downtrend. We haven't made a new low since this. As a result, we're looking for it to come up and sweep this eye here. We're also looking for a down, the down trade. We're looking for that to occur. If news is the way it wants to be, price is going to move down. But if it's not hawkish come news, this is 2 p.m., we're looking at price continuing higher, which is good. That means we are at the end of this move and we can just press buy and let it soar. That works. With this being the case, let's go back over here to the 5. Boom. Let's do the same thing over here, just cause. I noted that way up there as the most recent high, but I was wrong for doing so. That one there. Why am I marking these? What's the point in marking these if we're not taking a trade? Learning. I hate it, but I'm going to miss out on this trade. I'm going to miss out on this move. I'm going to miss out on this. I'm going to miss out on it. Because I want to be profitable. I want to know before I do. I wish to know before I lose. Simple as that. Right now, this is our current price range. I'm looking at this high, this low here. This is Asian session. This is London session. This is the time we would be trading if we were trading today. Looks like we're going to break through this low. Is that on both charts? Yep. We touched this low. We don't know if price is going to go up or down, though. I say let's wait. Outside of this price range specifically, do we have another low? We do. In this, though. Down, up. Right there. Down, up. I was going to count that, but this one's more enticing. Boom. Down, up. Really? So outside of current price action, which is this right here, we have all these highs, all these lows we could take profit from. What do I think is going to happen? I think because there is an imbalance, right? And we've been moving between this price range of a consolidation sort, right? We made our high here. We swept liquidity and now it's going lower. I imagine it's going to continue lower. And that's exactly what it's doing, is going down. So per general trend, we are within trend. Lower high, lower low. And that just makes sense. From here, same thing. We haven't crossed our first key level yet. And even on the hour, we haven't touched it. And that's what we're waiting on. We may have had some S&T divergence somewhere too. Now I'm thinking about it. Work our way up to the hour right quick. Now we crossed that. So we can actually move this over here now. Good. We have not crossed that though. This might be a potential S&T divergence here. I'm only going to mark that on this chart though, because I want to see exactly if it's going to do what it's doing on the S&P or not. We even have a fair value gap right there. So yeah, price is going to continue moving down. We had an inverse fair value gap on this candle. Price is going to continue down. Everything is saying continue down. We had even a liquidity sweep on this here. Self-liquidity, order block, fair value gap. We actually broke structure because this was a downtrend. Broke structure. And then from this break of structure, we had an inverse fair value gap as well, right? On the same candle. When this occurred, we would be looking for a fair value gap, breaker block, order block, or equilibrium. This is an order block that did in fact cause liquidity sweep. And we'd just be looking for the breaker structure or inverse fair value gap on the other side of this. As a result, we got exactly that. We're actually looking for that inverse fair value gap as we speak. I believe we actually got a breaker block. This up here. This candle right here would have been the breaker block. Price went way down, like closed near the top. It cleared what would have been a fair value gap, but we still have a fair value gap down here, right? Because this did not close. Well, it closed into the fair value gap here, but it was respected it. So this fair value gap still valid. This right here, though, this way is invalid. So we have this here. We're looking for it to close below, making it inverse, and to continue on down. And that would be our mode of moving. I want to go down to 5 minute and just watch this because we also identified that. So we crossed our key level there. From there, we're looking for the 5 minute break of structure, inverse fair value gap, or S&T divergence. I think we have an S&T divergence actually. Forget where. It may have been on this candle here. It was, I think. Ooh. Okay, so we have leg up. This was the low. We crossed this low here. Boom. What time was this candle? 6. Yeah, S&T divergence. I actually moved this low, so it would have been like right there. That's at 6. So yeah, S&T divergence price is up here. I'll go ahead and mark that now from here. So it's to 6, yeah, up to there. Boom. What's the low of the two? This right here. So we'd mark that instead. There is our S&T divergence. Actually, is it the same thing? I don't think so. Our SMT divergence lies right there. This looks the exact same, doesn't it? Biggest difference between the two? This right here crossed into our most recent key level, which would have been right here. So this was the thing. The patterns are the same now. We have down there, back up, and from here, down, back up. So I don't think we can call this an SMT divergence. It's not a valid one. Or at the very least, if it is a valid one, we know price is continuing higher. It's a pretty long wick down for the NASDAQ too. What is the NASDAQ doing right here? See this mess? Doesn't know where it wants to go in this. At least they can agree that this right here was a leg up. Wow. Both these are in agreement. Price is going to go back down. It's right up here. It's at this level. They agree and then diverge. Right here makes sense. From this right here to this way makes sense. It's all of from here to here. There to there. That does not make sense. I'm curious to know what TJR has to say about that one right there. Or if it's just part of news, because honestly, like, interesting. Weird. We crossed the level here, which is that sign. We have we have retrace. Doesn't quite make it up to this high here. We actually would have counted this as the high, up, down, I suppose. Boom. Doesn't make it to the high. It does cross this one though, and that's actually way over here. So as a result, price is going to keep moving down. Again, this is the 5 minute. What are we looking for? This is liquidity sweep. We're looking for the break of structure, which will happen if it closes below this. When it closes below this, or we get a inverse fair value gap or an SMT divergence. We do have a fair value gap right here. That is a valid fair value gap. We would get 2 and 1 if this were to happen the way we want it to. We would get 2 and 1. We'd get a value gap, inverse fair value gap, and a break of structure off the same candle. It can close all up in this and be valid. This guy closed below it for it to be inverted. Dang. We nailed that low right there. This is begging this to get closed underneath here. I've been doing this for a while now. I'm curious to see if I can see anything on these notes specifically. Hmm. Mm. Oof. I made these notes years ago. I wanted to see exactly when I created this because I can tell just from looking at it. It's old. I spent time on these notes. I spent time on all of this. So I'm curious to know when I created all of that. And I know it's been years ago. I know it has. Don't try to argue with me that it hasn't been because I only just started mentioning it like recently. I've been doing this for a little while now. Just building up the confidence needed to actually get it on the chart and then work with it. Price hasn't done anything yet, so what I'm going to do is I'm going to pause video, save yourself some time. I'm going to leave the notes up. I'm going to leave the chart as it is, so that way we can see exactly what's going to happen when it happens. I'm not going to change a thing. With that being the case, we'll be right back. Oh, sorry. Here, let me, there's going to be a button on this. There you are. Yay, it's muted now. I was busy playing Tetris, in case you couldn't tell. Yeah, we broke structure and had an inverse fair value gap on this candle here. Same one. From that, we moved down to the break block, order block, or equilibrium. I'm gonna say it's within equilibrium because we blew through this weak point here, this key level. Are we within our time to trade? No. No, we're not. Are we gonna trade? No. No, we are not. But yeah, we had an inverse fair value gap. Every confluence up to this says we have reason to believe that price is going to continue in the direction it is. From this, we just move the low over and wait for it to continue forming its move. Because technically this right here hits a new low of London session. This is on the 5-minute too, so. I'm not checking the weather. I'm after this. So yeah, we got an inverse for value gap. The app is saying the same thing that is. That's on the 5-minute. I believe if we were quick enough, we'd have spotted this for value gap here because we did hit a key level off of this low. We hit that. What we would have been waiting on is for a fair value gap or break block or R block to form, right? We hit it, went up, formed one fair value gap, two fair value gap. These were small. From that, we would have been up here, right, on the 1 minute. And we'd have been looking for an inverse for value gap or a break of structure to form. Well, we broke structure on this candle specifically. Why? Because we made a new low here, right? We would have entered off of this candle and watched it continue on down. This would have been optimal entry if we were in London session. If we were in London session, this would have been optimal entry. Yeah. With this being the case, I think I want to wait for our session to open. And that's what I'm going to do. I'm going to go all the way back up to the hour. So from this, I'm going to wait patiently. I'm going to wait for this candle right here. This one right here. It's going to open. It's going to close. From there, we'll have up, down. We'll see exactly what's up. Technically, we are still within our price range, right? We haven't broke through Asian's high or low. We are still in London session, so we're just waiting on this candle at the moment. With that being the case, we're going to go ahead and pause the video. And I will be right back because I want to see what happens in New York session. BRB. Look at that. We hit our key level. Woo. We hit the key level. This is on the hour. I don't know why this is up. I'm not using it. We hit a key level. We actually swept too. What do we do when we hit a key level on the hourly? We got out of the 5. If we were to take a trade, what would we be looking for? What would we be looking for? Let's just find that out. Break of structure, inverse value gap, or an SMT divergence. For the sake of knowing, I'm going to ignore SMT divergence for right now. Why? Fairly simple. It relies on another pair, of which I have nothing, like I have no, I don't really take pleasure in looking at a different chart when it comes to that indicator, right? I like for a clear indication. SMT is an indication, but until I'm more comfortable using SMT divergence, again, it's relatively new to me. I don't think I'll be using that. At least for right now. Okay. 5 minute. We're looking for either inverse for value gap or an SMT or break of structure. There we go. Boom. We had liquidity sweep there. Boom. We have a break of structure here. Why is this a break of structure? It closed, opened low, closed high, but the high is not above this high, nor is it above this closure. So break of structure there. And it'll confirm on the next down candle at break of structure, right? From here, we're looking for one thing in particular. Boom. That made the inverse fair value gap, which means price is going to continue for this move up. I believe when we started this, price was like in this right here. We thought it was going to continue down. That has since been wrong. Again, we're not taking a trade on this. I'm not even going to try it. Not going to attempt it. It's not worth it to me at the moment. I don't wish to lose more money. I wish to actually be profitable. And as a result, we're going to watch what happens. I believe this is a CPI news day. I don't know why I'm yawning. I've been awake for 4 hours now. Ooh, hello. The heck? I've never seen this before. So it's an FOMC day. We had a new thing. Expected market impact. Wow. Wild. So this is a new folder I've never seen before. Impact is supposed to be expected on this, and that was around 1. That is going to be around 1. And then, of course, the FOMC, we're not supposed to be trading on this day at all. Wild impact on the market. This is new. I don't know what this will do to the market aside from impact it. So, as a result of this being a thing, I mean, the decision's clear. We're not trading. But I'm looking at this and I'm trying to discern what market is and is not going to do because we're trading within trend. Gosh. And right now, we are working with this leg up here. I think market's trying to breathe in this. It'll like consolidate and probably continue to drop, which is what we're wanting it to do. This was a steep drop, and I'm pretty sure TJR covered this. I've already said it in the previous segment of this video. What would we be? We're looking at the 5. I'm jumping around, like doing everything other than identifying the blocks when they present themselves because, ugh. Historically, the S&P 500 has been going up. To look at it down is to know when to. Can you tell I'm dead on the inside right now? That sounded smart right up until I forgot what I was going to say. Completely just toast. We're on the 5-minute. We're just waiting for the break of structure or the inverse fair value gap, which I think is going to be in this right here. Like we'll have a leg down and it'll invert this. If it closes below, break of structure is going to be on this right here. If the closer is below this high here, right? That's what we're waiting on. Again, though, this is an FOMC day, so I shouldn't be expecting price to go the way I want it to. I imagine because it's the FOMC day, price is going to go much higher than initially anticipated. I was looking for price to go lower. That was a bad decision on my part. Very, very bad. Look at that. Look at it. The sighting candle is appeared. Either we continue up in structure or we actually break structure going back down. Curious to know what'll happen. We'll be right back in like 4 minutes. Look at that. Breaking structure. From here, what are we looking for? We're looking for... That's the wrong one. This one right here. We're looking for a February gap, a breaker block, an order block, or an equilibrium. We even got an inverse fair value gap from that because this closed below this fair value gap. Woo. We're not getting a fair value gap from this. I'm learning this as I'm going. I don't know why I exited out of that. I'm doing my research. I'm good at it. So this would be considered an order block. This leg down caused leg up, sweeping this liquidity, right? When an order block is confirmed, right, it's when price after what we think is going to sweep, right? I'm sorry. I think this is a confirmed order block because it swept this liquidity instead of sharply going back down afterwards. Does that make sense? Does that make sense? We're going to move this over here for a second so we can identify this. So, a bullish breaker block, which means we are in an uptrend. A bearish order block fails. Boom. Bearish order block fails, and the price breaks below it, turning the failed order block into a bullish breaker block. Which means this is a confirmed order block because price went higher. The failed leg down pushes leg higher, sweeping liquidity. If this leg down continued to move down, this would have been the breaker block. Is that right? So I don't think, and let's just reconfirm this, a bullish order block fails, and then the price breaks above it, turning the failed order block into a bearish breaker block. Which means this right here, for this to have confirmed, price would have need for this to have been a failed thing on the reverse side, it would have been something like this right here, where it was in a downtrend, right? And we had a leg up. This should have been the breaker block here, I think. If not this one is. This is potentially the breaker block here because we had, nope, not that one. This one here. So we had essentially bullish order block fails, so bullish, and the price breaks above it. Turning the failed order block into a bearish breaker block. So in a bearish market or in a downtrend, this would have needed to been broken above from price in order for this to be the valid breaker block. What are breaker blocks a sign of? Let me go to my notes and actually minimize this so you can actually see my notes. Did I take breaker block notes on this? That's news. Movement. Trends. I need to better familiarize myself with breaker blocks because I think this is an accurate representation. We had a leg up that caused the liquidity to sweep down, boom, but was invalidated when this price decided to go up above it. As a result, this is a valid breaker block. This is the imbalance And I believe it, like, breaker blocks are a sign of after it's been confirmed that this is in fact a breaker block, it will actually, it's another sign of imbalance and reversal in the market. And as a result, we'll see it come up through. Um, hmm. What am I looking for here? I'm looking for a bearish breaker block. This I'm considering an order block because it pushed price higher past this high. For this to be invalidated, price at some point is going to have to come up and above this high here, making it invalid. Per this breaker block, I'm going to say price is going to continue moving down because this is showing the imbalance. Price moves higher, takes out a high off of an order block first, and as that sign of reversal dictates, it moves down. We have a breakup structure here, right? Per this order block, that makes sense. It goes down. An invalid breaker block says price is going to reverse, such as this right here. So because it was invalidated, price was reversed back up. If this is valid, that means price is going to continue back down. Or no, I'm sorry. Did I say that wrong? Did I say that right? I'm looking at two different breaker blocks, I think. Price would need to go lower than this in order for it to be invalidated. Technically, it did. It did go lower. So because it went lower, we have this one here and this one here, and then from here to here, right? We're going to see price actually continue higher. For a brief moment. And I believe, boom, boom, sweep of liquidity, breaker block, or order block, sorry, sweep, breaker block, reverse. Am I using that right? Am I? Hmm. I smell some blueberry muffins. They smell very, very nice. If that's a valid breaker block, from there we could move on to the 1 minute. Look for a break of structure or an inverse for value gap. This is a fair value gap that we got inverted on this candlestick. The order block was then turned into a breaker block off the same stick. So from there, it's a matter of going down to the 1 minute and looking for a break of structure to the upside. I believe we got the break of structure here. So let's say, this is for an example, let's say we entered on this candle here, right? Entered on buy. And that's what this candle is for, because this was our break of structure on the 1 minute that we wanted Well, no, it didn't break structure on that. This would have been a bad call because it didn't close above this high here. That would have been a bad call, except we did break structure on this, I think, because it closed above this low. So we had to break a structure here. Now we're waiting for it to actually be fruitful. We'd have to wait a little while, wait for it to go up higher. We are far past our time. I think that would have been taken at 10:23. So for the chart, we would have had a decent entry. 10:30 comes around, we're not allowed to take a trade. No, I'm glad we didn't take a trade today. I'm glad we didn't. I think what I want to do is I want to break this up into another video for tomorrow because we're not taking a trade today, right? And I have a stream that I'd like to get to sooner today rather than later. Honestly, I don't know what I'm going to do this stream. I don't. So, with that being said, I think what we're going to do... What am I going to do? Not entirely sure what. Should have put a note for this one right here because I did not know. I don't know what exactly this right here was for. It's a good thing I made this a video. With this, I think we're okay. I think we're good. This is on the 5 minute. This is on the 1 minute. We'll go up to the 5 minute just to compare the two. How about this? I'll wait another 2 hours. I'll give it 2 more hours, and I'm going to put this on the 1 minute so we're not confused when we go anywhere. It's just legit. I'm going to put it right here because that is my 950 mark. This is where I was supposed to have figured out when I was going to take a trade. From here, it's just a matter of waiting, looking and waiting. That's all we're doing. I'm going to pause the video so it's not in the way. You guys can't see anything. Now you can. Essentially, I said if we did this right here, right? If we entered on this block, price is going to continue moving higher based off the confluences that this was a respected breaker block on the 5 minute. We had our inverse for value gap, and then from there we also had our break of structure. We were actually looking for our break of structure on the 1 minute, and that was our entry right here. We would have entered on this candle's move up because we went above this high here and above. We weren't above this high until about this candle, but we broke structure on the downside, proving that this, all the confluences leading up to this for signs of continuation were valid, and that price is in fact going to move higher. And sure enough, we see it moving higher. I need to get more comfortable at identifying breaker blocks because I feel as though I missed out the last 2 trades we took, and they were primarily because I could not identify and establish a breaker block well enough. So I think that's what I'm going to do the next couple of videos. Thursday and Friday, I'm going to be looking at the chart, and I'm going to be finding breaker blocks to help alongside the rest. Breaker blocks, I think, are signs of continuation unless they are disrespected. And the fact that in this case in particular, because we're identifying the breaker blocks on the 5 minute, they're disrespected when in a bullish order flow we have a down candle, right? And then price moves below it. This is a disrespected order block, making this a breaker block. Breaker blocks are signs of continuation that price is going to move higher. Same could be said in a downtrend, looking for a reversal. When we have a bullish candle in a bearish order flow, we're looking for price to go up above it and to immediately after sharply come back down. This is a valid breaker block in that price is going to continue moving higher, I think, because I said the same thing but differently. I think because this closed below, this is a valid order block, and so price is going this is valid. Price went below but also closed below. It filled what would have been a breaker block. Because it was a balanced out thing, price is going to continue in its direction. If this candle decided to close below this closure, below this high, but the price movement went up below it the way it did here, that would have been a disrespected breaker block, and as a result, or a respected breaker block. As a result, we would have seen price reverse back to the downside, kind of like what we did here. This did not close above this closure, but price still went higher than this one did, and so we have a reversal. But because this right here decided to close below this low, we have continuation. I need to make that into a short. From this video, it needs to be a short. I'm going to pause the video now, and we're going to watch. Like, I'm going to do this, right? You're going to see this here, and you're going to see when I unpause the video just how high this goes as a result of this sign of continuation. Again, we would have entered off of this blue line, this candle specifically. This is on the 5-minute too, because that was our official break of structure on this red candle here. We would have entered on this green candle. From that, because we also broke structure above that, from there, yeah, we'll see exactly what market has in store for us. For the FOMC, I imagine when it drops, price is going to take a dip, a large, harsh dip. So it's just a matter of waiting for that to actually come through. We'll be right back. Hello. I've been recording for 1 hour and 13 minutes now, and it's been on and off the whole time. Someone just knocked a whole bunch of paintings off the wall. Anyway, we entered here thinking price would continue higher. It did for a little bit, but not for, like, it was very short-lived. We are now back down, and this is where we are now. We've been bouncing around this the whole time. I'm pretty sure it's not. So these were our key levels up here and down here, right? And we essentially took a trade off of the 950 mark here. We watched price climb. And to be honest, if we were looking for a trade, we could have probably had one down here. And this is on the 1-minute, mind you. But we weren't able to do this because it had yet to hit our key level. We hit our key level first here. We watched it hit it a second time and go higher. And from here, we essentially thought, okay, yes, price is going to continue higher based off of, guess what? It's an uptrend on the small time frame, so it will continue. We entered there thinking it would. It didn't, and instead it's plateaued. However, looking at this, right, we do have an obvious uptrend, up, down, up, higher, low, higher, high, higher, low. It's now in lieu to make a higher high. If I had to guess, you know what? I have an idea. I have an idea. Let's do this, shall we? Let's draw a box from here to here. This is the price range we entered, right? This right here, I'm going to leave a note. We didn't backtest anything. What did we do? We entered off all confluences found on news day, FOMC. Let's go ahead and put that in parentheses. FOMC. To which price went down, then plateaued. How do you spell plateau? A-U? E-U. A-E-U. Yep, plateau. Between take profits. Next bid. Let's go ahead and date this for 10. Examine price after red block. We'll go ahead and shrink it to here. We know price was here. Let's go ahead and actually annotate that. Price is and was here. Boom. Let's go ahead and mark this. We don't usually do purple, but for the sake of knowing, from this to the purple that way is where price is currently. This is where we entered. The blue is where we entered. The purple's where it is, right? And of course, the red is symbolizing where exactly we were. Again, this is primarily me looking at where price was and essentially learning what the market has to offer based off of confluences we found throughout the day. This is before, during, and after. We went off of confluences from this first key level hit here, because this was after the 8 o'clock market open. We hit it there, found all our confluences needed. From there, went down to the 1 minute, found our break of structure, and we called this. This was, in fact, a break of structure, because up until this point, we were in a downtrend, at which point price continued to barrel on down. And from there, we saw price move lower. It is now retracing again, as you can see, and it is, at this point in time, consolidated between these two lines, almost perfectly consolidated. It's only wicked the bottom one time. It may have wicked it twice, but I can't tell because the block is in the way. I can't wait for next video because I'm going to re-examine this exactly, right? And I'm going to identify every single little block I can. So when we come back, we are more in touch with reality when it comes to taking trades off of the market when it's as choppy as it is. And even now, we're still in an uptrend. Right now, we are retracing in an uptrend off of all of that. And all of that, right? We have not swept any of these lows, so I'm going to keep them right where they are. And I have a feeling this is going to go so high to potentially right here. I'm going to mark this. I'm going to mark this right here. I'm saying it'll go up to at least here by tomorrow. I have two purple lines. The bottom one is where price was when I drew the red box on the 1 minute. The purple line on the higher time frame for the hour is where I think price is going to go throughout my day and into tomorrow. With that being the case, I appreciate you guys for watching. Let me know what you think is going to happen next video. Let me know what you think I could have done to improve this, because I honestly thought we entered in off a well-established trade here, and it could have been a very good trade. We could have just sat there and waited, and we probably would have made about $200. It's not what we wanted, though. Price is not moving as volatile as we need it to, so we need to wait a couple of days, because again, today's news, so obviously this was expected. And then of course we also need to wait for Thursday and Friday's news to come out, because different stuff, different days. Yeah. If you enjoyed the video, drop a like. If you find yourself new or on the comeback, potentially, if you like this kind of content, hit that subscribe button. I'll be streaming a just chatting stream later, and it'll be on Orbs Vault as well as Logistic Orb on Twitch. Be sure to check both those out. It goes a long ways, honestly. If you don't like the long form content, stick to this channel or check out my other channels. All those links can be found in the description below. Again, thank you guys so much for watching. I'll see you guys in the next one. Peace out.